The market stages a good bounce from the lows of the day after a weak start. The mid-cap index is now in the green. The small-cap index, which broke below the 200-day DMA, also stages a recovery.
DGCA cuts Indigo flight schedules by 5% as airline struggles to normalize operations after mass cancellations. Civil Aviation Minister says the government is determined to build a competitive aviation system. The Interglobe aviation stock trades with minor cuts after plunging 1,000 rupees in the last 7 trading sessions.
US President Donald Trump singles out Indian rice as hurting American farmers. He says that India should not be dumping rice into the US market and warns of tariffs. This even as a US trade delegation is set to visit India tomorrow. The Indian Rice Exporters Association tells CNBC-TV18 that the market for Indian rice in the US remains strong despite the higher tariffs. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Patakia. With me, as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. I mean, we've seen some recovery from the day's lows, right?
No, you've seen, indeed. And it's been that topsy-turvy kind of a session that we have had so far. The index at one point was down below the 25,750 mark. It's been a recovery from those levels, but now it appears as if that recovery is also getting sold into. So it's been a very volatile session, to say the least. As you can see on that chart there, every recovery that you are seeing is getting sold into. And even now, the index still may be 130 points higher from the lows of the day, but also off the highs of the day as well. At one point, the index had even moved past the 25,900 mark. So now it's trading below those levels. And as you can see, the heavyweights are contributing to the downside. ICICI, Reliance. A striking feature is Asian Paints. Even though crude prices are down 2% overnight and they continue to remain benign, Asian Paints is down around 4.5% in today's session. That is one striking feature of today's fall. And of course, the broader markets, though, they are the ones that have been the big talking point all through the week, and that continues to remain so.
Absolutely. Topsy-turvy kind of session, as you pointed out. But if you take a look at the advance decline ratio, right, it's firmly in favor of the advances. And one of the things was yesterday on the small cap and mid cap indices, right, we saw nearly 95 stocks in the red. But today, that's sort of reversed. We are at about 50-50 on the mid-cap index. And on the small-cap index, about like 60-40. And also, if you take a look at the stock action, Keynes Technology yesterday was down 12%, was down 12% on Friday, but now is nearly 9% in the green. Some of the sectors that are doing really well, which weren't doing well yesterday, is the realty stocks, which are all in the green right now. Oberoi, Prestige, Godrej, all of them, if you take a look, doing well in the green. It's also the same story for the PSU bank stocks. All of them losing yesterday, but all of them in the green today. Bank of India, Canara Bank, Indian Bank, all between 1 and 2% in the green.
And as volatility spikes on Dalal Street and portfolios bleed, we caught up with several market experts, including Samir Arora of Helios Capital, Vikas Khemani of Carnelian Asset Management, and Ashish Gupta of Axis AMC to understand how they were navigating this choppiness. Listen in.
Right now, it looks like somebody is giving up on India in terms of selling. I guess I would call it indiscriminately. This looks more like dumping. Now, many people say that some of the PMSs, which were exclusively or mostly into small cap stocks, are shutting because they have been doing badly for 1 or 2 years or 2-3 years. Not sure what the story is. But in general, today doesn't look like a day from which you should draw a conclusion that somebody is seriously looking at it and has decided after when the year is about to end that this is the time to sell.
This year, FIs have been seller, but the net sell is about $17-18 billion, right? If you look at the context of the supply, the IPO supply this year is going to be about $20 billion. And the secondary stake supply is, as I said, about $40 billion, about twice that, right? So the total supply is about $55-60 billion compared to about $18 billion of FII selling. So the larger headwind to my mind is coming from that supply rather than the $18 billion of FII selling. Compared to last year, the retail participation in primary issuances has moderated. And increasingly, you are also seeing, compared to last year, the valuations being demanded in many of these issues coming down. And some of the multiples have been scaled back down by about 30-40%. So if the primary market multiples start coming down, that is going to reflect in the secondary market, right? Because it's an arbitrage. So why will a similar company in the secondary market trade at a higher multiple if in the primary market it is coming at 20-30% lower valuation?
I've heard is that there was a little bit of margin funding selling which came through, especially from the retail investors, is what I've heard, but there's no way for me to verify that. And I think broader market trend, as you rightly said, has been there for some time. Large caps have been, kind of leading this rally in last, couple of months. To my mind, nothing changes. Market continues to remain sort of one of the most promising market. It's a stock pickers market. That's where we always focus. So I think that journey continues. And these kind of times only give you more opportunity to look at interesting ideas, which otherwise, in bull market, you don't get at a good price.
The DGCA has curtailed Indigo's winter schedule amid widespread flight cancellations. Let's go across to Shivani Bajaj for more. Shivani, tell us what's the latest?
Well, that's correct. The DGCA has officially come out with a statement saying that 5% of the winter scheduled flights by Indigo are to be cut. This has been communicated to the airline, and the airline has told us that they are now currently working on a revised winter schedule. So 5% cut. Let's see how that basically works out. In summers, on an average, Indigo operates 2100 to 2200 flights, and in winters, of course, because of higher demand, we see the airline, all airlines, not just Indigo, increasing capacity on certain routes because of the holiday demand. So from the summer 2100 to 2200 in the winter schedule, earlier, before in November, DGCA had approved a 6% increase in the daily flights, which comes around to 2225 to 2330 daily flights for Indigo. Now the DGCA has said that 5% decrease should happen on this increased capacity, which brings down the total number of flights that Indigo now will operate after this to 2115 to 2215. So this is 110 to 115 flights lower than what they had actually proposed for the winter schedule. So right now that is where we stand, 110 to 115 flights cut in the current winter schedule for Indigo. What happens next, we'll have to wait and watch, because official sources are also telling us that this might just be the starting and the beginning of cutting down capacity for Indigo. DGCA will look at how they perform on these numbers and then probably will take a future course of action. Back to you.
Shivani, thank you for the latest there on the Indigo saga. Meanwhile, Civil Aviation Minister Ramohan Naidu spoke in the Lok Sabha about the measures being taken amidst the crisis. Listen in.
Going forward, the government is determined to build a more robust and competitive aviation ecosystem. Through our policies, we are encouraging more new airlines to start and operate in India, ensuring fair access to airport capacity and eliminating any possibility of duopoly, controlling connectivity and pricing in our skies. More airlines mean more choice, more affordability, and more resilience for the passengers. Operations are stabilizing fast. Safety remains fully in force. Indigo is being held accountable. Passengers' convenience and dignity are being protected, and long-term measures are underway to make India's aviation sector stronger and more passenger-centric.
We also spoke with Hetal Dalal, the president and COO of IIAS, on the same issue. Take a look.
The board's silence in what can actually be construed as almost like a sort of mini disaster is an element of concern. So if you look at the public communication that Indigo has had, right, the first communication, the first stock exchange filing is on the 6th of December, well after the entire issue had turned into well after the whole chaos had erupted. And it's signed by a spokesperson. There's no name, it's just signed as Indigo spokesperson. See, one of the elements of this was that the whole sort of FDTL rules, right? And company had almost a year plus to comply. So the whole question comes not only managing this chaos, but really what was the kind of monitoring which was happening in terms of just complying with these regulatory changes. And that's really the other element that we worry about. At the end of the day, they ran a lovely airline, right? It was on time. They have a very dominant market share, and they were able to sort of, get headway when the opportunity was there in the Indian aviation industry. It's true that now it's an oligopolistic market. It's sort of a limited players, and Indigo is the dominant share. So beyond the point, it will likely get away because while customers will complain, there is reputation loss, but there are limited choices. And I think, therefore, this is the right time, given the entire chaos and the fact that, we are currently in this situation and the regulators also will have limited ability to do anything other than sort of impose maybe crippling fines. I think it's time to also review the entire industry in the way it operates.
The entire Indigo saga, Indigo now down for the 8th day running today. It's had a very choppy day so far, unlike the one-way down move that it saw yesterday. 0.8% lower currently on the stock, heading back towards the lowest point of the day. Take a short break. More news and updates on the other side. Stay tuned.
"26 years of CNBC-TV18.
Welcome back. You're still with us on Business Lunch. The Nifty and Sensex still in the red, 0.25% lower, but the mid-cap index holding in the green. But moving on, a delegation from the United States will visit India tomorrow for trade talks. Abhimanyu joins us with more details. Abhimanyu, what are you picking up?
A U.S. trade delegation is expected to come to India on the 10th of December, and there are 2 days of talks which are expected between both the sides. Now, these are not an official round of negotiations. However, all pending issues between both the sides pertaining to bilateral trade would be discussed, which will also include the issue of tariffs, even as both the sides remain confident of sealing a mutually beneficial bilateral trade agreement, the first tranche of which they intend to sign for now. Earlier, they were indicating there was a joint statement by both the sides that India and the US intended to sign the first tranche of a BTA by the fall of 2025. Nevertheless, both the sides remain confident of achieving some degree of settlement with respect to the issue of a BTA and also with respect to resolution of the issue of tariffs, which currently stand at 50%. India is also aiming to diversify its overall energy import portfolio subject to availability at the right price, and India is also aiming to address the issue of tariffs. Now, despite imposition of tariffs by the United States, there was a 13.3% rise in India's exports to the United States in the first half of this financial year, even as India remains confident of resolving the pending issue of tariffs as well as all other pending issues with the United States.
Abhimanyu, thank you for that update there. All eyes will be on what transpires from these negotiations later in the week. Now, US President Donald Trump has signaled the possibility of new tariffs on Indian rice. This comes ahead of the US trade delegation that's arriving in India today for a 2-day visit, as Abhimanyu was just mentioning. Listen to what Donald Trump had to say.
Tell me about India. Why is India allowed to do that? They have to pay tariffs. Do they have an exemption on rice?
No, sir. We're still working on their trade deal. So
yeah, but they should be dumping. I mean, I heard that from others. So you can't do that.
There's a WTO case against India
now.
Give
me the countries, if you could. Go ahead. India. Who else?
So India.
Mark it down. What'd you say?
Yes, sir.
India, Thailand, China into Puerto Rico, not into the continental U.S., but into Puerto Rico. They've bought the largest brands at retail too, right? So they have an incentive to subsidize their products so that they can keep it on the shelf.
Yeah, who did that?
The Indians own the 2 largest brands.
All right, then we'll take care of it. It's so easy.
Let's listen in to Dev Garg, the Vice President of Indian Rice Exporters Federation, or the IREF, on the possible impact of such tariffs on Indian rice. Take a look.
The export price out of India has predominantly remained more or less the same. When we talk about both non-basmati rice and basmati rice, the export price which the Indian consumer was Indian exporter was charging has more or less remained the same. However, we have seen that the price in the domestic market in the US, let me give you an example, like in 10-pound bag, which is the most popular packaging in the United States, was earlier being sold for around $13 to $14 per bag. This amount has now increased to around $18 to $19 per bag for a 10-pound bag. which is quite a substantial increase. So the realization for an Indian exporter remains more or less the same. But the increase in tariff has now been paid by the American consumer, because it is the importer who pays the taxes, not the exporter. So it is the American importer or people who are based in the United States who pays these tariffs, and then they pass on the tariff to the American consumer.
All of these rice names as well, after that initial knee-jerk reaction, are recovering from the lows of the day, be it KRBL, be it LT Foods, or even Kohinoor Foods for that matter. KRBL in fact has now moved into the green, is at the highest point of the day. LT Foods too has recovered almost all of its losses. At one point was down almost 7%. Take a short break for now. More news and updates on the other side.
"26 years.
Welcome back. Now, Paramount's Skydance has launched a hostile takeover bid for Warner Brothers Discovery after it lost out to Netflix in a long bidding war. Paramount's $108 billion offer is significantly higher than Netflix's $72 billion deal and offers $18 billion more in cash for Warner Brothers' shareholders. Paramount's Skydance CEO David Ellison spoke to CNBC on the company's bid. Listen to what he had to say.
I think the most important thing to go back here is, look, we're sitting on Wall Street where cash is still king. We are offering shareholders $17.6 billion more cash than the deal that they currently have signed up with Netflix. And we believe when they see what is currently in our offer, that that's what they'll vote for.
Were you told during the process that cash is king?
Yes, absolutely. What we were told repeatedly was that they wanted all cash. We delivered all cash. We were asked that they wanted it to be fully backstopped by the Ellison family and Redbird. We delivered it fully backstopped by the Ellison family and Redbird. And when you look at the scale of the companies, right, look at the scale of Netflix, 310 million global subscribers. When you combine the number 1 streamer with the number 3 streamer, that creates a company that has unprecedented market power, north of 400 million subscribers. The next largest competitor is Disney with just under 200 million. That's bad for Hollywood. That's bad for the creative community. That's bad for consumers. And look at how the market is reacting to this deal. We are literally seeing talent talking about the death of movie theaters. We've all heard Ted Sarandis' comments about how he feels about the theatrical experience. And you've also seen, and our deal is also offering more cash for shareholders.
And with that, it is a wrap on this edition of Business Lunch. Midcap Radar comes up next.
"26 years of CNBC-TV18